Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, August 16, 2010. Let's start with a look at the dollar-yen pair, where we saw the dollar fall rather sharply against the yen as disappointing US and Japanese data stoke concerns about global growth. The opinion is setting in that we are not going to have the kind of growth people were expecting, which is causing US Treasury yields to fall and is weighing on the dollar against the yen. We broke a short-term upward sloping line of support as well as most of our moving averages in the 1 hour time frame. As investors filed into the yen on the news, speculation increased that Japanese officials are getting closer to intervening in currency markets in order to counter excessive yen strength. Japanese Prime Minister Naoto Kan reportedly will hold an emergency meeting with Bank of Japan Governor Masaki Shirakawa to exchange views on the yen's recent appreciation, which they fear could further damage the nation's decelerating export-led growth. If we take a look at the GDP release from overnight, we see that Japan's economic growth slowed sharply in the second quarter, which added to widespread concerns that Japan's fragile economic recovery may be running out of steam as growth on key export markets also slow. Private consumer spending, which accounts for nearly 60% of Japan's GDP, was flat in the April through June period compared with the revised 0.5% growth in the previous quarter. Domestic demand subtracted 0.2 percentage points from GDP growth compared with the 0.5 percentage points it added in the previous quarter. The contribution to GDP from external demand, or exports minus imports, was at 0.3 points in April to June from a revised 0.6 in the previous quarter. With the increase in risk aversion as a result of the Japanese news, investors also filed into the Swiss franc, which, like the yen, is considered a traditional safe harbor. The dollar was down 1.3% against the Swiss franc, testing the support levels near 1.0350, which we had tested throughout August. And even going further back, we see that in late July we had the 1.4 area as support. You can see I added two horizontal lines representing those key support levels, and if we break below this 1.0350 level, that could open up the pair to further gains in favor of the Swiss franc. The Euro-Swiss franc pair, meanwhile, slipped roughly 0.6% in today's trading, extending its losses that have been pretty brutal over the last 4 sessions. Concerns about the negative effect of deficit-reducing austerity measures on the economies of nations at the periphery of the Eurozone are bringing back worries about sovereign debt and the ability of some of the PIGS countries to finance themselves. The cost of insuring Irish sovereign debt, for instance, against default using credit default swaps hit its highest level since March of 2009. Last week, the ECB bought short-dated Irish government bonds in an effort to calm investor fears about the recapitalization of the Irish banking system. We're going to have another bond auction for Ireland during tomorrow's European session, which markets are now closely watching. We can see that in the last 4 sessions of trading, we have paired about 1 month's worth of gains by the euro against the Swiss franc, and we find ourselves back in the levels we had during early July. The decline in US Treasury yields also pressured the dollar lower against the euro, despite concerns about the upcoming Irish government bond sale, which I had just mentioned. Also, last week's large losses for the euro also set the stage for a correction on Monday, in which the euro gained. Again, investors will be carefully watching that Tuesday Irish debt auction for the level of private sector demand, and that could determine how the euro fares throughout the rest of the week if we see the sovereign debt fears resurfacing or if they are quieted with a strong bond auction. Taking a look at one of our commodity currency pairs, the Australian dollar US dollar, we see that it fell overnight on the Japanese news, breaking below its support from last week at around 0.8930, but it found support rather quickly and managed to rally throughout the rest of the session, and especially in New York, reaching 0.8990 area before stalling. U.S. equities paired earlier losses and traded in the green throughout most of today's session, though they did slip late. If we zoom this pair out to a longer time frame, we do see a rather nice bounce up off support at 0.8850 in this pair. This level had acted as important resistance throughout June and July until we broke it in mid-July, and so now we're actually testing it as support. And so far, we did have a pretty strong up move following the test of that important level. Taking a look at a second commodity currency pair, US dollar, Canadian dollar, we see the pair actually moving in favor of the greenback throughout most of today's session, though for the most part we continue to consolidate the gains in favor of the greenback we had seen during last week. Now, we did have some releases coming out from the US. For instance, we had data on housing with the NAHB Housing Market Index for the month of August, and we saw that it slipped to 13, which was lower than forecasts of a small increase, falling to its lowest level since March of 2009. The New York Fed Empire State Business Conditions Index, meanwhile, also came in below economists' expectations, though it did show an improvement compared to July. The index rose to 7.1 from 5.1, though forecasts had called for a larger 8.0 reading. And finally, we had the Treasury International Capital report on foreign capital flows, which showed net buying of $44.4 billion in long-term U.S. securities in June, after revised purchases of $35.3 billion in the month before. China's holdings of U.S. Treasuries fell in June for the second straight month, though that country remains the largest foreign holder of Treasuries with holdings of $843.7 billion. Analysts watch these data as an indication of foreign demand for U.S. investments. Overall, the data indicates a general lack of interest in buying anything but longer-term U.S. government bonds, with much of that interest with official Asian buying. If we look at monthly net TIC flows, which includes short-term flows, we actually had selling of $6.7 billion compared to $17.1 billion gain in May. And that's it for today's fundamental highlights as well as market highlights. Let's see the upcoming fundamental docket and what important releases to look out for. Tonight we will get RBA meeting minutes from Australia as well as the CB leading index for China. Overnight, we have the current account from the Eurozone and consumer price indexes from the UK, which is an important release considering the higher importance that inflation data has had in the UK recently. Also, Germany posts its ZEW economic sentiment. That acts as a leading indicator for how analysts and institutional investors feel about the German economy. We'll also get a speech from the RBA Governor, Glenn Stevens. Tomorrow in the US, we have another batch of data including producer prices, housing starts and building permits, as well as industrial production and the capacity utilization rate. From Canada, we get data on manufacturing sales as well as foreign securities purchases, which is a measure of foreigners buying and selling of Canadian bonds and equities. The US data is expected to show some general improvement, so that could help to boost equity prices if we come in on forecast. And that will wrap up today's daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.